Welcome to our Market Movers watch list for the week of May 26th, 2026. The DarkSqueeze Radar Leaderboard is back in business. We scraped the top 50 tickers and narrowed our list to 8 tickers that look like they're about to make a move. In the past watch lists, we've brought you VSH, NVTS, Keel, Wolf, Soundhog, Match Group, Poet, QCOM, FSLR, GitLab, and LITE. Yes, we've had a few break support like GameStop and JetBlue, but we've picked winners more than losers. We try to pick tickers that are early in their move or have large upside potential. Remember, we're not financial advisors. Our content is for entertainment purposes and not a recommendation to buy or sell any security. Please do your own research. We've got some great trade ideas to cover, so let's get to it. The first on our list is WAL. This potential defensive stock is bullish on all long-term timeframes, but is seeing fresh volume and a decreasing short interest. With a short volume ratio below 50%, this supports our bullish thesis. Look here at the dark net volume at 28 million over the past 5 days, and compare this to a well-known center stage stock like IONQ down here at only 1.86 million. So to us, that huge dark pool volume sounds like institutions flying under the radar. We don't think this is a short squeeze scenario, but more like discrete positioning for a slow grind up into the end of the year. We included it in our watch list because we saw option order for the $115 calls for November, which if reached, could represent a 46% upside potential for this stock. For technical analysis, we are seeing a new algo buy trigger with the Insider Finance indicators. Insider Finance is a real-time options platform, but also has a technical analysis suite of tools that we here at Block Stocks never trade without. We've included a link to our review of the platform, and our review site has some discount codes that could make it worth your while. We've got 2 supply price targets at $83 and $96. Further out at November 20th sweeps, we've got an order for the $115 call options, which matches up to a 1618 fib extension. Support lies at this demand level of $75. Next is RHP. This stock saw 5-day net selling, but then look here, with a drastic reduction in short interest by over 64%. They've got a dividend of $1.20 per share coming up in June. This ticker is bullish on all long-term timeframes, and the daily momentum oscillators have just crossed up above their respective horizon lines on the daily timeframe. Our first price target for this ticker, based on previous supply, is around $119. Which would represent an $8 move if reached. Support lies at $109. Our third ticker is KURA. I'm intrigued by this one because it's sitting in what's called a nested squeeze. This means that sequential squeezes can fire from daily to 3-day to weekly, with each one providing a fresh burst of momentum to propel each move higher. There are also a couple of gap fill opportunities when you zoom out here on the daily time frame. So our first upside price target based on supply is $12.27. From there, our next upside opportunity, given the right conditions, is the upside gap fill to $15.40. If there's any fuel left, then is a second upside gap fill opportunity from $16 to $17. Gap fills exist because if there are any short positions that haven't bought to cover, any remaining short positions could potentially have buy to close stop loss orders all along here. So, as price gets near, market makers can hedge or nudge price into these pools of liquidity, but delta hedging, or basically buying shares. So, the buy volume could come from short covering, it could come from hedge fund positioning, it could come from insiders seeing an opportunity, or it could come from delta hedging by market makers. Support is at $9, but we would put our stop at $10, where this confirmation line is. Next is SMCI. On the leaderboard, there is some profit taking going on here. We caution traders that this stock is a highly volatile stock with single-day huge swings both up and down. But this ticker is bullish on all timeframes. Momentum oscillators cross to the upside on the daily timeframe. We cross-check this ticker with option flow, and the target strike price on or before the end of the week is $40. We're also seeing June monthly block trades and option sweeps for the $45 and $50 call options. If price reaches $50, that would represent a 9x trade opportunity. Because of the volatility of this stock, we put support at the confirmation line at around $33.50. If the stop is triggered, a better re-entry could then be possible without losing your shirt. Next is CIFR. Again, we see net selling, maybe profit taking. But we see this ticker as bullish on all time frames and also sitting in another nested squeeze. If the market pulls back, this ticker could pull back. But when we cross-check this one with option flow, we are seeing bullish flows and a golden sweep for the July 17th $25 calls. A golden sweep means the single order's premium was over $1 million. We are also seeing option sweeps for the June monthly $30 calls and the July monthly $35 calls. If $35 is reached, that could be a 2x trade opportunity. Support lies at a demand level of $19. Next is IONQ. On the leaderboard, we're seeing bullish volume, and this high short volume ratio could put this ticker into a short squeeze scenario. When we cross-check this stock with options flow, we see very unusually high out-of-the-money strike price targets at $85 by the end of the week and $90 by mid-June. That, to us, is very unusual to expect a $20 upside in a single week. Support is at $55. Next is ACHR. On the leaderboard, we're seeing net buying, decreasing short interest. That could be short covering, a short volume ratio under 50%, meaning less than 50% of daily volume is attributed to short positions. When we match this up to its price chart, we see it's bullish on all long-term time frames. The daily has just flashed an algo buy trigger and momentum oscillators are turning up. When we cross-check this ticker with its option flows, we see July monthly sweeps for the $8 calls, as well as repeat sweep orders for the July monthly $10 calls. Support lies at $5.70. The last ticker on our watch list is LPTH. I included this one for its short squeeze potential. First, look here at its short interest change over the past 2 weeks, at a whopping 106% increase. But then, when you cross-check this with option flows, we see a positive gamma environment. What does that mean for price? Well, when the market is positive calls, the market makers are the opposite of that. They are short calls. Well, when price and momentum is turning up, being short calls loses money, right? So, to neutralize the loss on being short calls, they have to neutralize their delta exposure by buying shares. As the calls continue to get closer to in the money, the delta increases, so their delta hedging or buying shares has to ramp up. But by the same token, they will need to realize those gains in those shares in order to offset or basically pay for the loss experienced by being short calls in a positive price action. So, this buy and sell balancing act often tends to pin price at the highest open interest. So, where is the next highest open interest above where price is now? Well, first we see repeat sweeps for the June 18th $20 call options. The second interesting thing is, when we view open interest on this gamma exposure strike ladder, price is already past $15, currently sitting at $16.95. So, the next highest open interest down from that is the $20 strike price. In other words, the gamma accumulated in all of those next highest open interest call options can act as a magnet for price because of gamma hedging by financial institutions. They'll want to monetize all those call options, so they'll buy shares in the stock. This buying pressure will make the call options profitable. They then sell off those calls for profit, which in turn offsets the cost basis on the new shares position. The peak gamma exposure means that buying pressure will max out here and could cause a sharp reversal from profit taking. This could explain the sudden increase in short interest attempting to fade that $20 peak. So delta hedging is done by market makers to neutralize deltas, and gamma hedging is done by financial institutions to monetize shares positioning. Due to this selling triggered at the high open interest strike price, like a call wall or a put wall, we try to exit a little bit before that, often 50 cents prior to the target strike price, because we don't want to be the institution's bag holder. That's it for this week's watch list. Be sure to like and subscribe, because at the end of the week, we'll follow up on our watch list to see how we fared. We'll see you in the next video.